Good afternoon, traders. This is Jack, and welcome to your Friday video. A little bit of a review as to how we traded this week, but what it might mean heading into next week. And ultimately, the idea here is where are we going for March monthly expiration? So we just came out of a week where it was the last few days of February and the first few days of March, and we're above two key levels that we talked about for 2 weeks. That's 39.50 in the S&Ps, and it's actually 40.50, which is where we closed 2 points above today for Friday's futures. And I'm going to show you why I think it all goes back to the dollar. But before we take a look at the dollar index, here's a weekly time frame on the S&Ps. Do you notice anything special about this? Well, there's a big red line here in the middle of my chart, and that's a voodoo line. It's a great indicator that we have here at Simpler. And for all the fans of Elliott wave analysis, there's certainly an argument for a short from 4,100. And I think what this looks like is a setup for two scenarios. I think they're both highly likely. 4,100 could be an area where you're ready to short this market, and I get it. There's no problem with that. I don't have an argument against that. However, if we do not fail at 4,100, we have continued to make a really interesting pattern since October, really from January. But it's really inside this green rectangle here, and I'm going to describe to you what this looks like to me. And if it gels with you, awesome. Higher lows and higher highs, we tend to come up here and create some structure and then fail, create some more structure above us, but continue to go higher and fail, but go higher still, and continue on to create more structure. And if we're going to, my overall goal for this entire process to actually be complete would be to go into the August 1st highs at 4,300. And if we fail, the failure point is 4,100, and that's this magnetic fire line right here, 4099.48, the fire line. And from there, that might make sense for us to continue to trade under the daily 200 and the daily 100, which is what you see here on the left-hand side, which is actually where we are above the dark line, the dark blue line being the daily 200, and the aqua line here being the 100. So we've had an interesting run, especially on a Friday. Check out this nice little squeeze, rally up into 40.50. Ungodly, right? I mean, that was just bam. No room at all to get short. In fact, in the futures room today, we were kind of waiting on a dip to buy, and we just never got the dip to buy. It was just continuing to melt higher, and it was very January, February-ish, which makes me think that we are going back into where we were in January and in February. So 4150, 4200, any takers? Or is this just a short from 4,100? I think it's important to know these levels regardless, right? There's no compression on the S&Ps on a daily chart. Everything reverse, but if we were to just fill the gap up from the gap down, if that made sense, the mid-February range here is actually right up to 4,100. So if we're failing, you're buying, or I'm sorry, you're selling the 410 calls, or you're buying 410 puts on SPY, right? We know the dollar's had a pretty good move. Everything goes back to the dollar these days, the relative strength or weakness, depending on which country you're in. But if you're, watching the dollar and you're kind of looking at this from a larger time frame point of view, it's normalized. It's kind of continuing to trade sideways, and that's okay. It's had a nice little run up to 105 that kind of hurt things in the S&Ps last week, but now we kind of know what the playing field is. We know what the interest rate hikes are going to be. We kind of have an idea of CPIs and employment numbers, and we're about 3 weeks, yeah, I guess next week, 2 weeks away from another FOMC, and we'll see if there's a little bit of a catalyst that can take us higher, and we'll see if that hurts the dollar a little bit. But the strength in the dollar last week really threw me just a big wrench. I was just like, well, okay, maybe this does make sense for the time being, but whenever you have a melt up Friday like that, especially above 39.50 and ending up at 40.50 plus, this supports my idea that I've been sticking to for about a month, which is slow and steady progress back into the August of 2022 high. And then from there, we short it with our heart's desire, to our heart's desire. But the point of this video is to look very carefully at 4,100 first. Because I tell you what, we have one of the best analysts here. His name's David Starr. He does that Elliott wave stuff. And I tell you what, the Elliott wave says a short from 4,100, and that just happens to be a voodoo line. So there is a good argument to be getting short from 4,100 at some point. But if we do not fail there, we might be looking at least 100 points higher. And so it's important to know these levels. Gold and silver, I am continuing to be on the sidelines with. If we do kind of trade sideways a little bit, it'll be safe above 1850, but I don't really know. I don't have an argument for us to be trading much lower in gold. It's just kind of a weird spot. Precious metals are their own unique little beast. Silver futures /SI. Nothing here on a daily chart, just still kind of waiting to pick up some Delta 60 long calls going into September, October, November for a long silver squeeze. But right now, I've kind of been on the sidelines. My first 2 trades of the year were gold and silver, but there was a good reason to. And I don't have those reasons right now. So we have to be smart about where we pick our spots. Okie dokie. Pretty straightforward today. There's no mysteries about what's happening. Dollar gave us a good sign of what it's doing, and if it continues to kind of go back down, that's going to be helpful for that 4,100. But that's what we'll keep our eye on next week. Okay, we're past earnings. We're past a bunch of things that gave us an excuse to be bullish. My take is now is we're above a few 50% retracement levels. We've made very steady higher highs. It's not been pretty. The question is now is how long can we stay above this descending daily 200, and is this inflection point at the daily 100 and 200 crossing here, is that bullish, or are we really going to get a reality check and trade back down below 39.50? But I kind of like the idea of taking out the 22 August high, 4,300. But at least we know if we do fail, we can totally fail and make sense from it at 4,100. And that's the best I got for you today. I feel like there's been a lot that's been happening, and it's just nice to get past it all, get past the Fed, get past earnings. And now we have a lot more to look forward to because we're above some key levels. And so we'll take a look at Monday. If we are gapping down, back down to 40.25 or 4,000, we'll have to really be careful. I like the idea of buying the dip into 4,100 until we get there. But we really got to keep an eye on market internals. If you're new, market internals are these 4 things here on the left-hand side of my chart. We're going to do a deep review of these Monday, basically for all the new members, and kind of put them into practice next week a little bit more, just so you can get clear on what these tell you and why they're so important. But before all that, have a great weekend. Thanks for being here, and we'll catch you in the next one on Monday. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.